All right, traders, the green streak continues. I ended up making only one trade today for a $2,100 profit or a 7% return on a further dated option contract. With that being said, I'm going to be going over the trade recaps. I'm going to be recapping my analysis and commentary. I led proper direction today. I told people to avoid puts as every single 30-minute candle was green and bullish. And then from there, people were asking me in the middle of the day, what is the best level for puts? Where are we looking to do puts since we're not going to be doing it at the moment because every candle was green and bullish on the 30-minute? And this is what I had to tell people, man. I gave them the high of day, the best level possible. You could see right here, one of the members within Trader Society said, what are you waiting for? 422. I told him 422.50 to 423. And I made it very clear within my trade ideas section that keep an eye on $422. And we had a nice drop. As soon as we hit 422, we had a nice drop. People did well on that. People also hit puts at the gap when it went to 420.30 and filled the gap. They hit puts. They sold in the money when it went under 420. They sold at 419.90, 419.80. They made $1,000 off of that. One member made $3,000 off that scalp. And then right here, the best level for puts today could be $423 for the scalp. If you want the best level, wait. And throughout the entire day, I told these people to avoid puts. And in terms of my trade that I ended up making and taking advantage of was within my watch list. In the pre-market, this is what I had to say. I said the SPY is opening it up flat. My charts are saying it's going to crash if we can crack 417.85. As soon as we cracked 417.85, I hit puts. I sold my puts in the money as soon as it went under 417 for an 8% win. I ended up locking in $2,100 profits. Then from there, I led with the proper analysis and proper commentary. As every single 30-minute candle was green and bullish, there was no reason for puts at our levels. We had scalpers try the levels, which was 420. Remember the gap at $420? We had scalpers try that, and guess what? All the levels worked. If you scalped in and out initially on the first time before it happened, it worked. Puts ended up working right here at $420.30. Remember the gap at 420? We hit puts, and well, I didn't hit puts, but some people hit puts. One guy made $3,000 within this small drop, a $3,000 profit. And then the zone 421.50 to 422, right here, the high was 420.50. It worked on the initial reaction. $422 worked on the initial reaction multiple times. And then my best level was the best level to do puts. I told him $423 is the best level to do puts, man. It's written in stone. People ask me all the time, what's the best levels? What's the best price? I will always give you the best price I can possibly give you. And my price midday was $423. As you can see, if you go to the trade ideas section, keep an eye on 422, but the best level for puts is $423 for the scalp. And that was literally the exact high of day. Dimitri ended up taking that. We had multiple traders take that. Big shout out to them, man. And big shout out to Steven Top G. He absolutely crushed it within the chat today on calls and also on the put side, but he mainly did calls, man. Big shout out to him. So look, man, how could we avoid getting trapped? Because we didn't get trapped in puts. In every single level that I gave for puts, which was the market open, that worked phenomenally. Which was the 420 gap, that worked the first time. 421.50 to 422 zone, that worked the first time. $423 worked the first time. And I get it. The trend is super bullish and puts are getting destroyed, but we scalp and we get in and we get out. One way to make money is to trade against the trend. I don't encourage it, but what I'm saying is every single level that I had for puts written down worked for the first time today. The initial reaction, the first occurrence, not the retest, not the triple top, whatever you want to call it, right? It was the first initial reaction. It all worked, man. The watch list was so spot on in what I saw in terms of the watch list, and this was the morning trade that I took. SPY's opening up flat. My charts are saying it's a big crash coming. Once we crack 417.85 and react as a resistance, we should easily test 416.61. That was my target. And it went to 416.79. My target was literally the lows. I sold them as soon as it went under 417 because when puts go in the money, they're going to try to take them back out of the money. So I sell the puts in the money. That's the game, man. Same thing with 420. 420 puts went out of the money, so they're going to try to become back in the money. That's what they're going to try to do. And then the trend's bullish, so it's going to bounce off the previous resistance level. That's why I told people, if you're doing puts in the 420s, the trend's bullish. So it's a quick scalp. Initially, we should drop first, and then they're going to try to bounce it at the previous resistance. They're going to try to bounce it right here at this 420.70 level. And surely enough, the trend remained bullish and they bounced it off the level. And I called out those levels earlier. Within my live stream, I told people, we just formed the V-shaped recovery, and SPY had a nice breakout above 417.60 live on stream. It had a nice breakout above 417.60. The 30-minute candle was bullish. I told people when it drops back down to the top of the V, this previous resistance level, this is where the bears just got trapped right here at this resistance. Well, at a breakout, they're going to try to bounce it in form of support. And another reason why I was swaying away from puts throughout this entire day is because every single dip was banking. And when I was in my puts in the morning, it was frustrating a little bit at first, because what I ended up noticing was every single time it would hit like a nice level, it would just bounce back up instantly. It would just rip instantly, like see right here. Every single time it would touch support or touch the low of day or touch close to yesterday's lows. All of these bullish wicks kept forming on this slanted sloping support bullish kind of trend that was about to form, right? So I noticed that and I said, man, these calls are banking, these dips are banking, and you can just see, man, every single time it dropped, it would just spike right back up, right? So that's why I avoided puts throughout the rest of the day from there, because every single 30-minute candle was bullish, and I made it very, very clear on that. And I also stated SPY is going to continue to retest and break out above these wicks. This wick right here, green bullish on the 30-minute, I told people it's going to try to spike back to the high of days and hit the top of the wick, and that's exactly what happened. And then this wick right here at 419.70, same story. It's going to try to bounce back up and spike above the wick. Every single 30-minute green candle was bullish. The 30-minute chart has saved my life by not getting trapped in puts or not getting trapped in calls, not getting trapped, trading against a trend. It is possible to make money trading against the trend. And I know a lot of successful traders who do very, very well trading against the trend. Do I think it's the best way to trade? No. But if you're scalping in and out quickly and you have a profitable strategy, then so be it, man. The disadvantage is it's not the best risk to reward ratio. And at some point, that trend is going to kick in. And if you're in against the trend and it kicks in, then you lose. That's one of the issues with the trend. If you're going with the trend, you can kind of hold it a little bit longer. You have a better risk to return ratio. It's a lot easier to trade because it just rips instantly off the key levels if you understand how levels work. Trading with the trend is much easier and a much better way to go. But you also must understand key levels like 423. It would make zero logical sense. Like SPY went from 417 to 423. It would make zero logical sense for this to just keep on going up. It had such a big move to the upside. Puts got destroyed. Every 30-minute candle was green. This was all preventable if you trade what you see. People will watch my trading plans, and one thing they don't understand is that's what I see when the market's closed. So when the market's closed, what do? I identify patterns, and I trade what I see. So when the market's closed, I see patterns. But when the market's open, and if there's no confirmation, or if I'm seeing something on the chart where, it's telling me don't do puts, like I saw a bearish pattern on the daily chart, but the chart was telling me once I got on my puts to not do puts again, because it's just going to go green overall bullish on the 30-minute, and it's holding yesterday's lows. You have strong wicks, you have strong support, where a major bear trap was created yesterday. You see, you have the red 30-minute right here, you have the red 30-minute right here, practically the same price. As soon as you get that green bullish 30-minute with the wick, you see the top wick, green bullish 30-minute with the wick, guess what's going to happen? It's going to explode up. I want you to compare the left side to the right side, and you tell me if that's predictable or not. It's nearly at the same price. The candlesticks are practically identical, red and bearish, red and bearish. It forms the green bullish wick. What does it do after that? That's the beginning of a strong uptrend. It hits the key support level from yesterday's lows, beginning of the strong uptrend. It retests the high of the wick. See how every time it forms a wick on the 30-minute, it spikes back up to retest. 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 Do you see that, man? If you simply looked at the 30-minute chart and you would just wait for something to develop, you would realize, wow, if we trade what we see and don't blindly trade a pattern or let some pattern or what we think or what we think is going to happen, or what pattern that we see when the market's closed, or whatever pattern you're seeing is, you have to use confirmations, and you have to actually trade the price action and trade what you see. Don't trade what you think, trade what you're actually seeing. But you must be aware of patterns and you must be aware of levels, but don't just blindly trade at the level. But in terms of trading blind, if you're going to go against the trend and you're going to trade blind, you need to understand the best levels. And the reason why I said 423 was the best level and not 422, the reason why that is, it just makes logical sense. Think about it. The bears are getting destroyed. So if the bears are getting destroyed and there's no confirmation to do puts and we want to try puts, wouldn't it make sense to go with the best level possible? And how do you come up with that best level possible? Look for levels that haven't been tested. What's the next level that hasn't been tested? So check this out. Recently, there was a major bull trap where the bulls got destroyed and SPY crashed heavily from $422.58. You see that? The market's open, it crashed from $422.58. What would be the next best level that a lot of people are not aware about? And the reason why they're not aware about this level is a lot of people don't look and take into consideration extended hours trading levels. And a lot of people don't think the way I think. If puts already banked off of 422.58 and there's no confirmation for puts and they're just getting destroyed, why not go with a slightly better level or like a zone? So the zone would be 422.58, but the best level would be right here, $422.99 in the pre-market, a level that was never tested. That's the game, man, to trade levels that have not been tested in a long period of time. People aren't thinking $423 because they don't see it. They don't see that in terms of what triggered this massive crash and this crazy bull trap where SPY got absolutely dominated. We're talking about a crash from 423 all the way to 416. What just makes it such a genius level is because, first of all, it has big downside potential with very limited upside potential because we'll use a tight stop loss, right? That's a level where you can just trade blindly against the trend, but I do encourage confirmations, but it just makes sense. At some point, it's got to have some sort of small pullback. It can't just keep on ripping the entire day. It's just not realistic with this type of move, right? But it just makes sense, 423, because like I said, this is where the true bull trap was created and it was never retested, and people aren't aware of that. They don't understand the initial reaction. The first time it goes back to that level, it's going to try to drop. The first time it hits the gap at 420 and the puts go out of the money to 420, it's going to try to drop. And surely enough, when it hit that 420 level for the first time and filled the gap, it went to 420.30. They took the puts out of the money and they brought them right back in the money at 419.80. And I told everyone who took that trade, one guy made 3K. I told them, get out at 419.80. Get out as soon as the puts go in the money. And the reason why I told that was the trend was bullish on the 30-minute, and the previous resistance level was right here. So if the trend's bullish and SPY breaks above resistance right here, this is resistance, 419.80, had a nice drop. If the trend's bullish and it breaks above resistance, they're going to try to bounce it at the previous resistance where it previously had a nice drop right here at 419.80. It's going to try to react to support, and surely enough, green bullish doji, and they spike it right back up. And you have to sell into the move, man. You have to get in and out quickly like a sniper. It's called selling into the move. If my target's at 419.80 and we hit 419.80, I exit. I don't even see how it reacts. And the reason why that is, when it hits my levels, it can reverse very, very quickly. And I can get back a lot of profit. Don't be greedy. Sell into the move. Don't have fear of missing out in terms of giving. Don't have fear of not taking profit and, oh, I should have held. None of that exists, man. We scalp. We get in and out like snipers, and we manage the money. We're money managers, man, and we take money out of the market. Every single week, we're taking money out of the market, man. I can't remember the last day since I had a red day. It's been over like 2 weeks since I've been green, man. I can't remember the last time I had a red day. Every single day, it's printing. You just have to understand the tricks behind it. Puts just went out of the money, they're going to try to bring them back in the money, right? So you can make money scalping against the trend. You can do, a lot better off scalping with the trend. There's plenty of ways to make money, but just understand, we're scalping anyways. We get in and out extremely quickly. In every single level that I gave out for puts worked. The first time today, my idea where 417.85 cracks, get in puts, that worked. It went to 416.80. My idea for puts at 420 gap, it worked. Puts went out of the money. It went to 421.30, and then they went back into money, dropped to 419.80. Worked very nicely. My idea for $422 puts, it dropped twice from that level. My idea for $423 puts was the exact high. And I'm very content, man. I've hit a point of wealth where I'm very content. I don't feel the need to trade every single day. There's going to be a lot of other businesses, a lot of other sort of sources of income, a lot of other ways to make money, man. It gets to a point as a trader where you just realize there's so many other ways to make money, and there's so many other ways to create wealth. But look, man, I had my one trade, I called it, and I led the right direction, and I gave the proper direction. And what I need you guys to understand about the videos that I'm making, I am showing you what I see when the market is closed. Now, I'm not going to blindly trade what I see. And I was overall bearish on the daily pattern, but there was no confirmations for me to be with that. So I'm not going to blindly bias myself into trading with no confirmation or trading something that I just don't see. If I'm seeing spies towards the lows and there's a red candle here, right? Just look at this, man. Red and bearish 30, red and bearish 30. It's at the same level. Green bullish 30 with the top wick, green bullish and 30 with the top wick. What does it do? It explodes up. It explodes up. And then at some point it has a nice drop. What's the most likely outcome where it drops? It's just not realistic for it to continue to go higher. So if at some point it's going to drop, what would be the best situation possible? The best trade idea possible would be puts at 423. And the best time for it to happen would be towards the end of the day. Why? Because at some point it has to drop. And if it drops right before the market closes, there's just no time for it to go back up. Don't you understand? You have to be able to see it when it's not even there. That's how good you have to be in a sense. People didn't even know about 423 because they didn't look in the pre-market. A lot of people will disable extended hours or they won't take it seriously because there's lack of volume, but it gave us the best level. It was the best level where the bulls got trapped and it was never tested. And think about it. All my levels for puts worked in terms of scalping the first time. So market open puts worked. 420 puts worked. 422 puts worked. If they're all working the first time, wouldn't it make logical sense for SPY to drop the first time it hits 423 at the best level, especially right before when the market closes? So this is how you think, and this is how you have to understand. And like I said, man, I was very content. Today, I didn't feel like trading a lot. I also had a lot going on. You know, I did dinner, I did on lunch, you know, with my family, and I had a lot of stuff going on behind the scenes, guys. I have a lot of things to do here. But I was just very content, and I didn't feel the need to trade. But for those who wanted to trade within Trader Society, I gave them the confirmations. I gave them the best information that I could have done possible. And I'm just glad that I'm leading right direction. And I'm not getting people destroyed in puts. Because I'm telling you, man, it wasn't too long ago, I would say a little bit over a year ago, I would be one of those people who would get trapped in puts. And I have not been trapped in a position for several months. Several months I have not been trapped. My biggest loss will be like a 50-cent move against me on the SPY. I just never get trapped like that, man. I cut my losses extremely quickly, and I don't have a lot of losses. Every single day has been green for the past 2 weeks. So that's my analysis, and that's my review on today, and that's the commentary that I provided within Trader Society, and I led the overall direction, and people asked me, you know, what's the best level for puts, and I told them $423. Now, with that being said, and like I said, man, I don't take every single trade with my analysis. The point of this is to be self-sufficient and to know when to call it, right? I didn't like the price action in the morning. I thought it was terrible. So I just sat on the sidelines. I made my $2,100 profit. My trade idea worked that I saw. And then I sat on the sidelines. I'm content. I don't feel the need to keep on going, to keep on trying to trade and hit it. I made a couple $1,000s. And I was content with that for the day. Some days I'll go in. It also depends on the zone. You know, one reason why I didn't make a lot of trades today is something that I've noticed personally with myself is I'll identify these patterns and I'll identify, oh, well, this is a pattern I'm interested to play where history is going to repeat itself. So one of the styles of trading that I like is basically it's like the perfect trade. Based off of everything I know, I like to stack everything in my favor. So I want everything aligned. And I saw, you know, a bearish pattern that could have potentially played out, but there was no confirmation for that pattern. Based off what I was seeing when the market was open, there was no reason for that pattern to repeat itself. And based off of that, man, I just didn't want to make a trade. I like combining what I'm seeing in terms of past history, and then if I'm seeing confirmation in real time when the market's open, if I get the confirmations, I like combining that together where history is going to repeat itself. And I did not see that on the put side, so I stayed away. In terms of the call side, though, it was seeable, but I didn't take advantage of it. In terms of the pattern that was seeable for the call side, just compare the 30-minute chart red bearish candle, then you have the green bullish wick, same level, strong uptrend, every single 30-minute candle is green, no reason for puts, right? So I didn't take advantage of that move, and all the levels for puts still ended up working anyways. But I just didn't want to take advantage of it, man. I didn't want to take advantage of it. I was not as prepared, I would say, to take advantage of that. Sometimes I'll miss it, but I saw all the bullish confirmations and I pointed it out, but it personally was not what I planned for, and I just sat on the sidelines, and it is what it is. I am fully okay with missing out on the move, but I will always provide the best analysis, what's going on with the confirmations, and the best levels to trade at. I will always provide with that. But yeah, man, if I were to take those levels that I called out, it would have been a 5-figure day for me. But I have no regrets, man. I don't feel the need. I'm very content in terms of where I'm at right now. But anyways, based off the trading plan, let's discuss the trading plan for tomorrow. So basically, in terms of how the daily candle looks, guys, this can go either way. In terms of how the daily candle looks, I'm not seeing too much. This can go either way. Obviously, at these levels, I'm more bearish in a sense. But this is what I can say in terms of what we're focusing on in our levels. So $421.82, that's going to be a key level. The previous closing price, the closing price of the day, that's always a key level. So we're just going to be watching. We'll see how it reacts. $423 to $422.80 is going to be a key zone for puts with a very tight stop. The disadvantages, it already played out. But I will be keeping an eye on 420.70 to 423. I'll be keeping an eye on it. 421.82, I'm just watching. We're going to have to see if it reacts to support or resistance. As of now, that 421 is very, very strong support. We'll see how it reacts. Now, in terms of what's the level where the bears truly got screwed, where I would buy calls. So if you watched my last video, I'm looking to do the same potential thing I did in my last video at this level. And this is the level. $418.70. This is the level where the bears got absolutely destroyed. Take a look at this. There was a support level in the pre-market that never tested. There was support here for about 3 minutes at 418.70, had a very nice drop. So initially, if it spikes right back up, the most likable outcome is this support is going to react as a lower high and it's going to have a nice drop. But as you can see, so that idea worked in theory, but then you could see the trend was bullish, and I called this out. I said 417.50, they're going to try to bounce it. The trend's bullish. I called that out live on stream. V-shaped recovery. This level right here is going to try to bounce because SPY had a nice breakout above, and the 30-minute was overall bullish in a sense. And just the way how SPY was moving and reacting today, every single dip was printing and banking. That's why I just didn't like puts. That was another reason why I disliked puts, just the way how it was moving and reacting today. But you can see it bounced off the level. Previous resistance turns into support, which is bullish. So they're going to try to continue the uptrend for the breakout. Now, where did the bears truly get screwed today in terms of levels that were not retested? What were resistance levels that weren't retested, where it just kept on kind of going up? You can say this level right here, 418.70. This is like that true level that has not been retested. You can see once it broke above 418.70, it never retested. So the bears got absolutely wrecked. They got trapped holding, right? Now, with that being said, this is the level where I would now take into consideration to scalp calls. And the reason why that is, this is a previous resistance level that has not been tested, and it triggered a massive bear trap. The SPY went from 418.70 to 423 in just a couple hours, right? So once the SPY drops back to 418.70, this previous resistance level that has not been retested, the key word there is not been retested, overreaction to the upside. When it drops right back down, I'm looking to buy calls. We taught this strategy in my last video. It worked out phenomenally, 416.30 level. Remember how I told you guys when it goes back to $416.30, they're going to try to spike it because that was a previous resistance level. As you can see right here, this was the level. If we go back to 416.30, this was resistance, and it had a strong breakout above the resistance. See in the pre-market, this 416-ish level was resistance. 416.30 was a resistance level. If you look at the 30-minute, it's a lot more easy to see. Let me show you, right? So based off of yesterday's video, the $416.30 level. Let's go to that. Let's see. So 416.30. This was the level, man. They never retested 416.30. It never retested that 416.30 level. So when they retest it, they're going to try to bounce. And surely enough, as you could see, this is where it was. So 416.30 was strong resistance. You see the strong resistance. This is what I was looking for right here. Strong resistance, nice drop. It broke above resistance and it never retested. So the same thing, and once it retested, it bounced, and we banked on calls yesterday. We were buying at the lows. So what's the new level? That was never retested. Look at this, man. Look at the 30-minute chart. I'm giving you guys the pot of gold. 418.70. 418.70 was not retested. Once it broke above 418.70, it kept on breaking out. As soon as they broke above 418.70, it never dropped back down. That's the level where the bulls are going to try to bounce this. So my new level for calls is 418.70. The strategy is SPY had a massive breakout once it went above 418.70 and the bears got trapped. And it never retested 418.70. It just kept on going up. So when they drop it to 418.70, I'm looking to buy 419 calls. And what they're going to try to do is they're going to try to bring those 419 calls that went out of the money to back in the money. And nobody is sharing this information with you, man. So that's our secret level. That's our level that nobody is really talking about. And that's the one I'm interested in doing calls at, right? So that's my level for calls that I'm going to be keeping an eye on. And these are quick scalps. We're not holding these for long periods of time. We cut our losses extremely quickly. If SPY goes 20 to 30 cents against me, I will typically cut my loss. My biggest losses will be a 50-cent move against me on the SPY, not in the option contracts, on the SPY's price, right? So with that being said, 418.70 calls. We're keeping an eye on 421.82. We're keeping an eye on 423. Now, if this does go above 423, what's the next level where we're going to be trying puts? So if we go above 423, the next level where we're going to be trying puts is going to be right here. We're going to look at the daily chart and identify, okay, what's the next best level? So looking at the daily chart, if we break above 423, they're going to try to drop it at 425. 425, what they're going to try to do is you can try to scalp this one against the trend if you'd like. If it goes above 425, they're going to try to bring 425 puts back in the money, sell the dip quickly. Your true best levels would be this, 427.89. 427.89 will be your true best level. Gap, close reversal, one of the highest gaps nearly towards 52-week highs, right? I'm telling you, man, we have these levels, these initial reactions that work, man. We understand a key level that has not been retested, and when the option contract goes out of the money, they bring it straight back to the money. What was the key level that was not tested? The gap at 420. It was never tested. When it filled the gap, what'd they do? They took the puts out of the money. It spiked to 420.30. And then as soon as they took them out of the money, people were buying puts, and they brought them right back into the money. And then they sold the dip because the previous resistance was going to try to react to support. The trend was overall bullish on the 30-minute, so they sell the dip because it's going to try to bounce previous resistance off support. We understand this very quick scalping strategy where you can use and print thousands of dollars within minutes. Within minutes, man. I see people, Dimitri will make $2,000 to $3,000 on a trade within a single minute, sometimes less than a minute, like within seconds, man. And people are laughing, saying like, oh, the trend's bullish or la-di-da-di-da. But the point is, they figured out a way to make money going against the trend. And I'm not saying it's the best thing to do. I'm not saying it's the best strategy. I try my best to trade with the trend, but I love trend reversals. And if the price action is just too crazy, I'm not going to try to stab it against the trend. That's why even though all my levels for puts work today, I swayed against it. And the reason for that was the trend was just so bullish on the 30-minute. I didn't have the heart to go against it, even though it worked initially, right? You can try to make money against the trend. It can work if you know how to do it. I just don't believe it's the best thing to be doing. But there are true levels where you just have to hit. It would make zero sense. Like if SPY goes 417 to 423 in a single day and the market's about to close, it makes zero sense for it to continue to go up on a resistance level that was never retested. 423 was never retested until today. So, of course, they're going to try to drop it. Look at the rejection. It hit 423 and closed at 422.45 in a massive sell-off. What do you think's going to happen? Trade what you see, man. Initial reactions, the first time. How many of you watching this video knew about 423? I've been talking about this level since it formed on May 30th. I told people on May 30th, you can go back and watch the videos as well, when we hit 423, that's when you're going to want to do puts, especially if SPY had a big sell-off and then it had a massive move to the upside. That's overreactions. That's great confirmation for puts. It's overreactions. But I personally didn't hit it, and that's okay, man. I don't need to hit every trade. I don't need it, man. There's so many other ways to create wealth, and I was content. I made my $2,100 profit on the day in the morning, and I personally disliked the price action, and I disliked overall, how things were going. But I pointed the right analysis in the right direction, and the key levels and the strategies worked. So with that being said, that's what I'm looking for tomorrow. I want to, whenever it decides to hit 418.70, I want to buy calls whenever it decides to happen, and I'll use a tight stop. I'm keeping an eye on 421.82. I'm keeping an eye on 423. The new best levels that have not been tested for puts, 425, and what was the second one? The true best one. So we're looking at 425 for a quick in the money scalp, and you watch all this stuff will tends to work, man, on the first initial reactions when nobody sees it because they don't prepare and study the past history. 425 we're eyeing. The reason why is 425.26 has not been retested. You can see right here we have strong resistance, major resistance at 425 sold off, major resistance 425 sold off. Initial reaction, they will try to reject it for a small drop because it's just too overbought, and it makes sense. It makes sense for a quick level to see a small drop even if the trend was bullish. And then from there, 427.89. They take 428 puts back out of the money, bring them back into money. We have this out of money to in the money strategy on point. We have this initial reactions on point, man. Look, if you want to join Trader Society, it's the first link in the description. Like I said, man, over a year ago, so I started using 30-minute candles 1 year ago. I've been trading since I was 12. I've been doing this for a very, very long time. Never used a 30-minute. One of the traders who I connected with within Trader Society, he introduced me to the 30-minute. He taught me some things. I didn't quite understand it, but I began to use it, and I mastered it. It took me about 6 months to truly get it, but once I saw it, I see it now, and it's very, very clearly. The 30-minute candlesticks have changed my life in terms of developing a new strategy, in terms of not getting trapped into positions, in terms of going with the overall trend. It's life-changing, man. That 30-minute chart has truly changed my trading forever. That has had the biggest impact on my trading in the past year. Out of everything that I used, the gaps, the daily chart, the initial reactions, the overreactions, the trend reversals, the trading strategies, I stacked the 30-minute. I like everything being stacked in my favor. Like I said, another reason why I didn't do the trade is because I saw this pattern for puts, but there was no confirmation for it. So once my watch list idea worked and I made $2,100, I just kind of called it. But I just wasn't as prepared and just didn't see it as clear. I just wasn't as prepared. That was mainly it, because I brought awareness to this bullish pattern and the calls banked. I just didn't play them. But just lack of preparation, man. Just lack of preparation for this move that could have potentially happened at 416s, and I just didn't do it. I just did not want calls at this level, but I should have paid more attention to this pattern on what could have potentially happened. But like I said, man, we called every single 30-minute candle. I told them bullish, going to try to retest the wicks. I gave them levels where they could potentially buy calls. I literally told them in the morning stream 417.50. The analysis was so spot on. All the key levels for puts worked, even though the trend was super bullish. Every single level I gave for puts today worked initially. Every single level, every single one. I gave good levels for calls. The 417.50 dip in the morning, I gave that out when I exited my puts. I said the 417.50 level had a breakout. They're going to try to bounce it here. That's where you can try calls if you want to do that. And then the 423 level, best level for puts. So if you want to join Trader Society, it's going to be the first link down below in the description. It's a one-time fee. It is a lifetime access. I would encourage you to join now. It's instant access, one-time fee, lifetime access. And what you will get access to is my real-time commentary. You will get my real-time commentary. You will get your questions answered in real time. You will get the best levels to buy calls, to buy puts every single day. We will try our best to give you the best levels to possibly trade at. You have to be patient, wait for things to develop, wait for trends to develop, wait for bulls and bears to get trapped, and then we wait for our key levels to hit and trigger. Then we seize the moment, like a lot of people did at 423. So many people banked on that 423 level. So what we're going to provide you is we're going to provide you the right direction. We're going to get you in the right direction of the overall market. We're going to get you the best levels to buy puts, to buy calls, and you're going to be truly prepared to trade the best setups, best prices. We're going to give you confirmations. We're going to show you and explain to you why this is confirmed bearish or bullish at this level. And we're going to teach you how to trade, man. If you want to become self-sufficient, if you want to learn how to actually trade, if you want to learn how to take out market every single day on a weekly basis. Take money out of the market, man, because that's what we're doing, man. I'm creating more liquidity in that market. And me personally, I don't see any competition within this market. I truly don't. The only competition I see is myself. So all this liquidity that I'm creating, I see it as they're competing against me. That's how I see it, man. And the people who are not in this team, not in this group, they will be competing against us. And we have very high net worth individuals within the chat room. We have a couple multimillionaires, and we have the best analysis. We have the best trading analysis in the game, man. There is nobody calling our levels in advance. And if you think the preparation videos are good, you have to be there to see it in real time in the market when the candles are moving, because it's way better, because these videos are preparation. That's that, history could repeat itself. There's a pattern here. In the chat room, it's live. It's confirmations, and we're trading what we see. We're not blindly trading a pattern. I didn't get hurt on puts today because I didn't blindly trade a pattern. Even though every single level worked on puts, I didn't get trapped because every single level literally worked for scalps that I gave out. It worked. There were small wins, but those base hits add up, man. People think the way to get rich is to have big wins, and that's not the way. The way is to have your base hits add up, man. If you have small wins, you're going to have very small losses because you're training yourself to take your profits quickly, which means you're going to train yourself to take your losses even quicker. That's the beauty of scalping. If you hold something for a long period of time, you're going to train yourself to hold your losers. Think about it. Oh, I just had a massive win. I can afford to hold this one. I can afford to add more here. I can afford to do more strike prices. It's bad trading habits. It leads to big losses, man. That's why we don't like holding our hopes, is what we call it. We scalp in and out quickly like snipers, and we take money out of the market. We understand the initial levels to do it. We knew 420, no resistance at 420. It was just an empty gap. We need to do puts there. It worked. $422. There was resistance there. We need to do puts there. It worked. $423. Basically didn't exist. Nobody knew about it. They don't look at the pre-market, right? Why would you want to have hesitation and fear at 423 when SPY went from 423 all the way down to 416? And the market's about to close and it's due for some sort of small drop. So the most logical situation is when it tests 423, it drops because the market's about to close. It doesn't make sense for calls to keep on printing. What makes sense is to bring those 423 puts straight back in the money. That's the most logical outcome, right? And that's what you have to understand. You have to understand what would be the most logical thing in this situation. If SPY was at 417 and it rallied all the way to 423 straight up and the market's about to close, would it logically make sense when it's at the best resistance level that it had not been tested in the pre-market, that people weren't aware about? Would it make sense for it to keep on going up? It wouldn't, because it's due for a small drop. People are going to take their profits. The competent people are going to say, wow, 423 was the pre-market highs where calls got screwed. The market's about to close. We could have a drop here. Let me sell my calls and play it safe. I'm content. I'm not greedy. It's at the exact top. Why would I keep holding my calls? Why would I buy calls? We're going to teach you everything, man. We are going to put you in the best situations we can possibly put you within the overall market in terms of what we're seeing. We're going to teach you to trade what you see, not what you think. But me personally, I like, thinking and seeing patterns. And then when I get the confirmation of trading what I see and I have the pattern, those are the ones that I like entering. I don't like purely just trading what I see. I personally like identifying patterns in history. And then when I see that it's going to work due to confirmations or due for a reason to actually get into the trade, then I will look to get in. I like everything in my favor. It's like a perfect trade. You have everything on a checklist and you write off all those check marks. And if they're all green checked, you take the trade. If they're not all green checked, it's not as good. It's more of a lotto. There's no reason to trade something that's not unchecked. Wait for the best setups, the best prices. Wait for the perfect trades. We're going to teach you everything. So if you want to join, it's the first link down below in the description. One-time fee, lifetime access, live trading streams. We banked on puts live on stream, and then I gave my analysis to buy calls at 417.50. And then throughout the entire day in the chat, we avoided puts. Every 30 minutes it was green. I kept saying it's going to retest. We led right direction, man. You get access to the real-time analysis. You get access to here. Look, man. Let me show you really quick. So the watch list. This is the patterns, and this is what I see when the market's closed. The trade ideas. This is what I see when the market's open. Right. I give all the analysis, everything. This is what I was seeing when the market is open. At 11:53 a.m., $423, best level for puts. Best level for puts, 423. That's what I saw at 11:50 a.m., right? I'm going to give you everything it is that I see. Signals, these are my real-time trade alerts that I will alert, but keep in mind, I'm posting every single trade I make, I'm posting in the SPY floor. The live streams, we do multiple live streams every single week. You get to watch me trade live, ask me questions live on the spot. The SPY floor, every single day, millions of dollars are being transacted within this floor. We're going to be the biggest chat room in history who creates the most liquidity within the SPY. That's what we do, man. We have a server dedicated to SPY, and you're going to see, man, the people who trade in the SPY floor, they're making money, and their names are in green. Willis, Dimitri, Jim C., Top G Steven, you'll see if they have a green name, these dudes print money, and they're doing it every single day, man. This guy called the exact high, 422.79. Steven, Top G within the chat, man. This is where the money's made. We're taking money out of the stock market every single day within this SPY floor. And you will see professional traders, you will see multimillionaires make money within this chat. They alert all their trades real time. And then we have the polls, we have, the victories is where people post their gains and stuff like that. But we had an overall good day, man. 61 people were green, only 13 were red. As we attract more people and more beginners, they're not going to be going green every single day right off the bat. It takes a lot of time. This isn't a blindly follow signals type of program. We're going to actually teach you how to trade and become self-sufficient. But it's going to take time, man. And I'm going to explain to you and see what is that I see. And I will explain to you why I see that and why I believe that. We led proper direction. This has been a phenomenal day. And I'm truly blessed to be in the situation that I'm in. Because like I said, man, it wasn't too long ago, just a year. I was not using 30-minute candles. And I would get trapped. I would get trapped holding for bigger wins. Not scalping. I converted to a scalper and I converted to the 30-minute charts. Those two things changed my life. Scalping, getting in and out very, very quickly for small base hits that add up. You start making a quick $20, $50. A year goes by. If you scaled it, if you compound, if you're consistent, now you're making $200, $500. A year goes by. Now you're compound, you're consistent. Now you're making $2,000, $3,000. And this is done within minutes, sometimes within seconds. Rapid fire, scalping, speed at the light. The biggest advantage, there's a lot of unfair advantages to scalping, man, is one of the advantages, your losses are so small, right? That's one advantage right there. You'll always have small losses because you're always getting in and out super quickly. Another advantage is there's tricks you can do with scalping that people that are holding in hopes for long periods of time can't do. There is levels that we know the first time they test, they will instantly reject. So we'll just look to get in a sense, even without confirmation, we'll just kind of get in because we know the initial reaction, they're just going to flip it very, very quickly, whether it's a 20-cent flip, 30-cent flip, right? They're just going to flip it. When this was looking bearish at 416.30, the team knew to hit calls because it was the best level, and that was literally the bottom. And then we use a tight stop if it doesn't work. But it's a trick you can do to basically buy when something looks bearish because we have this strategy when we know it's going to flip bullish, and it just instantly rips and you sell for a profit. You get the best entry. We just know the initial reactions where it's going to try to reject and have those reversals, right? Like at 423, it just makes logical sense, even if there's no confirmation, to hit puts at 423. And check this out. There was really no bearish red 30-minute candles today. There really was none. But once we hit the best level, 423, bearish confirmation on the 30-minute, guess what happens? SPY finally has a nice drop. Wow, a confirmation. Imagine this. I wonder, just imagine this. 423 is the best level for puts. The 30-minute candle is red and bearish, def candle. It closed at 421.90. It dropped all the way down to 420.90, a 1-point drop, rapid fire. Do you see how predictable the market is if you understand how to trade what you see, if you have that third eye? And that's my goal for you, man, is I want to open up your third eye because I didn't always have this eye. I wasn't just born with this. It took time to see things. And I'm going to show you how to see what not other people are seeing. We're going to teach you how to trade what you see, not what you think. But in terms of what I do, I personally like having everything in my favor. I love trading what I see, but I love combining that with a pattern or some sort of history that's going to repeat itself instead of just blindly trying to trade what I see at a specific level. I like histories. I like confirmations. I like things repeating itself. But the key is to understand is to trade what you see, not what you think, man. That's why I'll make these videos and the pattern will be completely wrong sometime. But guess what? I'm not blindly making trades off of patterns. I'm trading what I see. I'm using confirmation. That's why when you see this red candle, green bullish top wick, and then it explodes up to retest, what's the reason for puts? If you would have just used the 30-minute chart, let me know what's the reason for puts. And all of our levels for puts still worked initially. 420 worked, 422 worked, 423. It's amazing, man. Scalping. Like, people will laugh that we had people do very, very well on puts if they scalped at my levels. They all worked initially. And there's people laughing at that, because it's just a nice green bullish trend. I get it, man. There's better ways to trade. But the point is, they made money off of that. And we gave them the best level possible, 423, man. If you're scalping in and out, what does it really matter if you're going against the trend in a sense? But like I said, the one thing is, though, you don't want to get caught in going against the trend. That's the disadvantage. Going with the trend is a lot more advantageous. But that's the overall points and analysis that I wanted to make, man. There's a right way and a wrong way to trade against the trend if you're going to do it. Not saying it's the best thing to do, but there will be times where I do trade against the trend. The main reason why I didn't like trading against the trend was it's just the pattern was just so bullish. Everything was just bullish about this with the 30-minute greens. If 420 is going to turn into support, then the next level is going to be that 423 level. That's where next overall level is going, green bullish 30. And you could just see, man, just look at what happened yesterday. The craziest bear trap at this level, all green bullish 30, retest all the wicks, breaks out. Literally no reason for puts. There really was no reason for puts. If you use the 30-minute chart, it hit 423, got destroyed, bearish confirmation, and then it drops. I'm going to show you how to do this, man. Look, we have this mastered, and we're only getting better, and our growth is truly insane, man. In terms of the levels, I have never been as good as I am in terms of my trading. It just continues to get better, man, because we truly understand how the game works. We understand the levels where they're going to bring puts from out of the money to back in the money. We buy out of the money, we sell in the money. Same thing with calls. We understand the levels where they bring calls out of the money. We buy out of the money, then we sell in the money. We understand how all this stuff works, man, and I'm going to show you how to take advantage of small moves in the market that are very generous within time. At first, you're not going to be making a lot of money at first, but if you compound your count and you're consistent and you're disciplined, your life can change in one single year, man. It took a little bit over a year for my life to change, but it took a very, very long time, before that to figure everything out. But once it clicked, it took about a year for things to truly change once everything clicked. So we're going to shorten your learning curve for you. We're going to speed things up. We're going to open your third eye, and we're going to create warriors, man. I'm telling you, if you want to be the best trader you can possibly be, I would truly encourage you to join Trader Society, and we will be reinvesting the money that Trader Society makes to become better traders, to make our students more money as well. We're going to be investing into things. There's going to be big things within the future, whether that's software, whether that's new programs, new education, whatever it may be. We will be investing our time, money into resources that will continue to make you more money, because that's our goal, man. Eventually, I want to build up a very big, recurring machine, and we're just going to keep on putting the money back into what's making people more money, man. So that's the game, man. If you want to join, it's the first link in the description. I will see you guys tomorrow live at Market Open.